Good morning, everybody. Welcome to Tuesday. Hope you're doing well. And joining us this morning will be Dave in just a second.
That is Tina Turner. I'm Morning Dave. Good morning. Tis 8:41, and it's time to check in and see what's going on with your money. And, well, I'm back to relatively good news on a daily basis. Whew, what a change from the early half of last week, right? Phillip Statler is on the air, on the line from Statler Financial Services in downtown Sebring. Phillip, good morning. How are you?
Hey, good morning, Dave. I'm doing well today. I hope you are too. And, yesterday was, so day. Had a little green, little red, but
One of those, yeah. We were
yeah,
kind of noodling it through before we went on the air, and I was guessing because nobody's got any indications. But Dow was off by 140 points. Don't jump off a building yet because everything else was up. Standard & Poor's was up by a quarter. NASDAQ up by about 35. I was kind of thinking, and you can never say for sure, but it would make sense to me because the Dow didn't dip as much during that mini correction that we had last week. Maybe with the other indexes that did fall like a rock during that period, they're picking up some bargains that hadn't completely recovered yet, right?
well, it could be. It could be just, people decided because of some of the volatility, it's time to take some money off the table. After last week's, kind of up and down, they might have been sweating some bullets and decided, hey, let's take a little bit off the table right now.
Yeah, and just in perspective process too, that 140 points, it was only 1/3%, and that's not really much of a move in terms of a percentage basis. Talking about the dip that we had last week, I found a chart that I really found interesting. Over the last 26 years, that's a pretty decent level of trusting. We go through a dip in the market that's greater than 3%, about 7.5 times a year. We dip more than 5%, that the analysts call a pullback, an average of 3.5 times a year. And everybody was changing underwear at the notion of the dip that we took last week, where two of the indexes actually got solidly into correction territory. That averages a more than one time a year, even at the size of the indexes these days. So, there was an awful lot of panic last week at the speed with which it went, but when you consider a 5% pullback, which is kind of the average of what we got, that's going to happen over 3 times a year. Sometimes panic is really easy to get into, but it's not overly wise when you look at it on a long-term basis, is it?
Well, that's true. And like you said, I think yesterday is that on a, 5 years from now on a, they chart things on a weekly basis, not a daily basis. And you're not even going to know that something happened this last week.
Absolutely, except for a spike in clean underwear, there really wasn't anything that happened last week from Monday through Friday, or from Friday to Friday, was there?
There really wasn't when you look at those numbers.
So, as the voice of calm, we continue plowing forward. Get up to this morning after a day yesterday on Wall Street. We start getting some numbers that people are going to be watching real carefully. This is not the one that really moves the market like gangbusters, but it will because we're so sensitive to it at the moment. Wholesale inflation, the producer price index for last month, gets released this morning. And we were expecting to see 0.2% overall increase on the wholesale inflation, got 0.1%. And the core, the unvolatile stuff that, really just once it goes up, it stays up, that was dead flat steady, and they were expecting an increase on this. I mean, 0.1% doesn't sound like much in terms of a miss, but that's a few $1 billion more into the pockets of the companies that were maybe projecting worse, weren't they?
Well, it is. And so it's good news overall because it shows that inflation, at least now, is slowing down. That's going to be one more feather in the Fed's cap to say, okay, we can reduce interest rates now. And that's obviously what the market's seeing.
Absolutely. And the overall year over year wholesale inflation rate, that one is actually getting dangerously close to the 2% range. The last number we had on it, year over year, and I haven't seen what the current report is, but with 0.2%, I suspect it's going to be about the same, about 2.3% year over year gross wholesale inflation. We're getting closer now. Now, if the consumer prices will follow it, we'll be happy campers.
Yeah, that's true. And I'm looking, I just pulled up another report. I find this interesting because I see a little conflict going on here.
Mm-hmm.
The overall PPI, everybody seems to agree on. It was up a tenth of a percent. But
Mm-hmm.
now I'm looking at two different sites and two different reports. One site has the core PPI actually up three tenths of a percent.
Huh?
The other site shows that it was flat. So I don't know. We might have to flip a coin here, but I will tell you that it is not affecting really and truly the overall futures right now. So not sure which way that actually went. We're going to have to dig a little deeper to figure out who's right.
And figure out which writer has which voter registration, right?
Exactly.
I'm just a little bit cynical about the closer we get to an election, the more cynical I get about numbers out of the government. The overall number, though, was positive and was a miss to the positive side, to the good side, rather. So that's good news this morning, and I assume that the markets are going to respond relatively positively to that. Bunch of other stuff going on, just tidbits out there down the line that I thought merited mention. We've been talking about all the streaming services on the T&V. Have been getting rid of all the people that are cheating on each other's passwords. Guess what? Costco is starting that. They're cracking down on shared memberships. You buy a membership and loan your brother-in-law the card, Costco won't let you do it anymore.
I don't think they let you do it anyway, but people did it.
Yeah, now they're checking, actually. Oh, yes, and Tesla has announced they're no longer accepting any more orders for the Cybertruck. They're all booked up, and if you want a Cybertruck that you can order right now, you're going to be doing it on the secondary market, and the cheapest you can buy, if you want one of those boxy darn things that look like you're driving a dumpster, it's going to cost you $99,900.
That's crazy.
Makes you want to go out online and order one, doesn't it?
Not really. Hey, the other thing, I don't know if you saw this or not, but there's been a little shift in CEOs.
Yeah.
Starbucks stole Chipotle Mexican Grill's CEO, and that came out this morning. And man, the shareholders of Starbucks are loving it, up 12.75%. The shareholders of Chipotle, not so much, down 8%.
Whoa! Have you ever thought that personalization of the executive suite could make a difference in a stock's value? There's your lesson for the day, people, right?
That's right. That's right.
Yeah, it's interesting because Chipotle has gone through so many, ups and downs over the years. Press coverage of difficulties they've had a few years ago, and then the ups and downs. They are a premium-priced, fast food, for lack of a better term, restaurant chain. Glad to have them here. But I've always never considered them much more than a blip on the radar in the grand scope of things. Having their CEO going to Starbucks, making that big a difference in both stocks, kind of surprises me.
Yeah, that's definitely. And I think it was probably a surprise for Starbucks folks too that they made a change there. So it's going to be interesting to see. He's got his work cut out for him, I think, to bring Starbucks back around and make it even more profitable.
Yeah, with all their locations, that chain is an aircraft carrier, even though their menu range might not be as big as some restaurants are. It's definitely a big change to try to move. Earnings season continues, and we got one hallmark one at the top of the list this morning. I gather Home Depot surprised everybody and beat the street, huh?
Well, I don't have exact numbers on Home Depot, but here's what I do know is that their sales they're making some adjustments on their sales for the year. I mean, they had already told everybody that they expected their sales to be down about 1%. Now they've come out and tripled and quadrupled that. Now they say it's going to be down between 3 and 4%. And yeah, they expect that to happen the second half of this year. A lot weaker than anticipated for their full year guidance. And so they're trading down, not by much, but about 0.4% this morning.
One more time, you can beat the current numbers, but if you don't have decent guidance, you're in trouble, aren't you?
But you really are. I mean, that's what people want to know because that's what you're buying. You're buying future earnings.
Any other indications out of the tradings?
So we do have some things that have come out, not necessarily household names out there. Tencent Music Entertainment Group, which is, if you remember, is the Chinese company, but they do have some stock that's traded here in the United States. They reported a 1.7% yearly decline in revenue. So that was not good news for them. They also their mobile users came in less than expected from that standpoint, and so they're trading down pretty big today, down 10.2% right now.
Woo.
Yeah.
We got some big moves going on everything, don't we?
We really do. And there's a company called Kodiak Gas Services. They're a natural gas company. And they, again, one of those things, they posted year over year earnings decline, and they missed their top line number for the quarter. And they missed, their earnings from year over year, they earned only 6 cents a share versus 30 cents a year ago. So they're struggling with some natural gas issues. Sorry, it was down 2.7 earlier. It's not pulling up this morning right now for me to tell you what the current is. And the last one, well, it's not really earnings, but Hormel Foods. The Citigroup upgraded them from neutral to buy. And so that's got them up about 3.2% this morning.
Alrighty. Resetting the table for the morning, a little off day on the blue chips yesterday. The rest of the indexes did all right. 45 minutes before we open this morning, I'm seeing some green ink. What's the good news so far?
Absolutely. Green ink across the board, Dave. The Dow's up about 0.3%. S&P 500 is up almost 0.6%, and the NASDAQ 100 is up between 0.8 and 0.9%. So some good news across the board there. On the other side of the coin, we've got silver trading down this morning by about 0.9%, and then gold's up 0.1. Crude oil yesterday was, they had a big up day yesterday. They're down this morning from yesterday's close by about 0.3, but still they're bumping their nose, Dave, on $80 a barrel, $79.82 right now.
There was an oil industry analyst that when it got down to the 74, 70 range last week, he said, oil prices are too low. I wanted to find him in toilet paper his house or something. It won't be too low till we get down around 50, and I don't expect to see that anytime soon. Overseas markets, it was all green ink on the Asian rim, except for Bombay. For some reason, they had a bad day. But the Japanese markets were up by over 3.5%. Even the mainland Chinese markets up by 1/3% yesterday. The Asian rim was a good place to be. In Europe, kind of a mixed bag, but on balance, the European community is up this morning between 0.12 and 0.15%. Green ink, just not a whole heck of a lot of it halfway through their trading day. Keeping tabs on your retirement on a day-by-day basis, it'll drive you nuts. You need a plan. How do I get a hold of you to get a plan so I can retire the way I'd hoped to, Phillip?
Yeah, that's why I created the Core Retirement Design to help people design that retirement they always dreamed of. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And back here again with up-to-the-minute stuff tomorrow morning about the same time and a whole bunch more government data dump to go through. I'll see you then, sir.
But have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. It's not.
Hey, folks, again, I want to thank you for joining us today. Hope your day is well. Join us again tomorrow, same time, same place. Until then, have a great one. Bye now.